Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for our 3-day Metals and Mining Conference. Our next live presentation is from Castile Resources. Please note you may submit questions for the presenter in the box to the left of the slide. And you can also view a company's availability for one-on-one meetings by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome our next presenter. He's Mark Hepburn, Managing Director of Castile Resources, which trades on the OTCQB venture market under the symbol CLRSF and on the ASX under the symbol CST. Welcome, Mark.
Thanks very much, John, and thank you to everyone that has joined in to see the presentation. With me this evening in Australia and in the morning in New York, I have my co-director, Michael Pogis, who is a mining engineer and the Chief Technical Officer of Castile Resources. So we'll get straight into it. Castile is based in Australia. All of the necessary competence statement persons and waivers and disclaimers are there for you to read in your own time. I'd like to introduce Castile by saying that we are quite unique in Australia. We are extremely profitable, or we have an extremely profitable operation that we are planning to build. We have exposure to gold, which is the main revenue stream, but we're also lucky enough to have copper and other downstream critical minerals that we'll produce, being cobalt and also a magnetite product. Now, just recently, with the significant rise in the price of both gold, and copper's had a pretty good run as well. And now we have introduced a new product which has always been within our geology and within our planning, which is bismuth, which has seen a price explosion over the last 4 to 5 weeks due to the tariffs introduced by America and then China placing export bans on some of these critical minerals. And we'll work our way through that and how it's all coming together for us at this point in time. We've only got 300 million shares on issue, which is not a lot for an Australian company. Our share price has seen some swings over the last 12 months, as a lot of small companies have. It's currently sitting around 8 cents, and we have about $4.8 million in cash in the bank. So there is plenty of cash to do the things that we are planning, which we'll go through in this presentation. So this presentation will include the exposure that we have to the gold price, which has doubled since we've done our pre-feasibility study, how we've got this fantastic variety in our revenue streams, which is the copper and cobalt, which we have also, gold and copper being the key metals, as I said, with cobalt, bismuth, and a magnetite product being the co-products that we bring to surface and also produce revenue streams from. We've also been working with a team of geophysicists who have created a brand new application for what's called ambient noise tomography, which I'll explain to you. It is a brand new, has been brand new within the last 3 to 6 months for us, because we have been working with the company to develop for specifically what we do, which is find in our area, and you'll see up there, we're based up in the Northern Territory, iron oxide, copper gold deposits, extremely high grade, rich deposits of copper and gold, which have these wonderful byproducts with them, as I've discussed, the cobalt, the bismuth, and the magnetite. So let's keep moving. I zoomed in on that area that we saw just there, that little blue dot. That's the area where we are in Northern Territory in Australia. I want to point out this mineral field here in the top right. It is probably one of the richest mineral fields in the world. It has produced over 4.6 million ounces of gold and 350. But what's incredible about it is the grades that they've delivered. About 20 million tonnes in total of ore, grading 8 grams per tonne gold and 2% copper. Incredibly rich field. We think we have a repetition of that field about 35, 40 miles away, which is in the bottom left circle in the left. We have over 100 targets that we are now exploring in and around our flagship asset, which is the Rover 1 asset here, which has around about 8 to 9 years of reserves and is extremely profitable, which we'll go through. So this is the Rover 1 deposit. You're looking at it underground as it has been drilled out. As I said, we are still a development company looking now to develop this asset. There's about 9 years worth of reserves here, and clearly we think there is more opportunity deeper down and out here to the east. It starts at about 260 metres, which is in yards is about 300 yards, but that is well within reason. Goes down to about 1,000 metres here, which is really only the average of underground mines, current underground mines in Western Australia. So the depth here is no problem. And as I said, Michael has already done all of the design work designed for the first 8 to 9 years to begin mining. You can see here why it's a particularly rich deposit. 30 metres at over an ounce per tonne, or 36 grams per tonne. These are the sort of intercepts we were getting on this deposit. 7 metres at over 4 ounces, remarkable. 21 metres at 7% copper. So if you've looked at drill results before, you could compare these with any in the world, and they would be clearly amongst some of the best going around. These deposits aren't big, but they are extremely profitable, and that's the key there. So let's have a little bit of a look at what, once we've mined this, what it will look like, what the product spread will look like. And this is it here. Gold, around about 28, 29,000 ounces on average per year for at least 9 years. Copper, around about 7,000 tonnes, and that will be, again, for that same amount of time, all from the one mine, all from the one deposit, all from the one mining operation. Critical minerals, as we've said, copper, cobalt, only a small amount of cobalt, 300 tonnes, and then a magnetite product, which is worth about $230 US per tonne, and we'll do 75,000 tonnes of that per year as well. This is all production per year. So when we initially did our PFS in December 22, the average annual revenue from these 4 products was about $225 million. If you were to add up what under exactly the same circumstances and just use the higher price in gold. So when we did the study, gold was trading at 2,600 Australian dollars per ounce. It's currently trading at around about $5,100 per ounce. So you can do the mathematics pretty easily. On around about 30,000 ounces, just to make the mathematics easy, on around about 30,000 ounces, we have an extra $2,500 per ounce. That's extra on top of what we've already had. So that's around about 75 million Australian dollars per year extra revenue. And for the 8 to 9 years, say it goes out for 10 years, it's $750 million. So that's a considerable amount of upswing in that gold price over the last 2 years, which we have not added into these numbers. And we will be putting out a bankable feasibility study, which will include these new numbers. So we've used US $4.25 a pound for the copper price in this study. It's now trading around 474. Magnetite's around about the same, 230. There's been a significant drop in the cobalt price, but it's, again, these 2 products here are byproducts. These are the only 4 products that we currently have in the pre-feasibility study. Bismuth, which was left out of the pre-feasibility study, but was part of the production pathway. So it came out at the end of the production pathway, which I'll show you. But because it was only trading at about $4 to $5 a pound, it wasn't necessarily going to be extremely profitable for us. And I'm going to show you how that's changed just in the last 6 weeks with the export ban imposed by China on bismuth. And we'll talk a little bit about why there's been a ban imposed. So these numbers you're looking at here are completely obsolete. 2 billion in revenue, that's more like 3.5 to 4 billion now once you add up all the price increases. These are Australian dollars on the left, US dollars on the right. Clearly, we've had a remarkable increase in that revenue line from what I've just shown you, and the evidence of the price increases in the products that we're producing. And remember, that's not including the bismuth. So Let's talk a little bit about graphically what that gold price increase looks like. And you can see from 2023 to now to 2025, remarkable swing in the gold price. I'm sure as investors, you've all seen this and been party to that incredible increase in the gold price as time has gone on with increasing geopolitical tensions. So let's have a specific look at the bismuth price and what happened round about the end of January, start of February in this year, 2025. Well, first of all, obviously tariffs were introduced, and there was that tariff war going on between, and remains happening at the moment, between the US and China. So what China have done is have placed a complete export ban on bismuth. So at that point in time, and these are the uses of bismuth. It's used as a propellant in rockets, in missiles, and a coolant in defence thermoelectric applications. So it helps decrease how easily it is to detect a missile. It's in ammunition, and it's in an ally with other metals, again, used in defence applications. There's not a big market for bismuth throughout the world. It's around about 18 to 20,000, maybe sometimes 16,000 tonnes of refined bismuth per year only. So with, I guess, supply meeting demand, you saw it trading here at around about $6-7 per pound up until February 2025, when all of a sudden it had a bolt upright 7 times increase when China announced that complete export ban. So in the Rover 1 Castile Rover 1 bismuth resource estimate, we've got about 6,000 tonnes. And so if you were to place that into a mining schedule, it would look like about 600 tonnes per year, and that's over the 10 years to make the 6,000 tonnes. Doesn't sound all that impressive until you see what's happened to the price. So from $6, it's gone to $35 in Europe, and in the middle of March, it was trading at $55 a pound in the US. So you convert that into tonnes, times it by 2205, and then you convert that US dollar figure into Australian dollars. All of a sudden, you're looking at $190,000 per tonne of bismuth. So you could sort of see why the value starts to add up, and you're sitting here on 6,000 tonnes. So I'll let you do the mathematics there. This was a product that was simply sitting in a waste stream that we had separated, and I'll show you in our flow sheet. Just remarkable. Let's talk a little bit more about bismuth in China. So in 2024, we've mapped it out here. China produced 13,000, around about 13,000. 24 is the top bar. Around about 13,000 tonnes. I hope you can all see that. It's quite small numbers, which was around about 83% of the annual global production of bismuth. So all of a sudden, everything in red here, 83% of production disappears. So you're left with around about 3,000 tonnes of supply. The US alone needs 1,800 tonnes a year and used 1,800 tonnes in 2024. Again, not a lot, but it obviously, along with everyone else who has to source the bismuth, 67% of it, it's such a specialist critical mineral, 67% of it they source from China. So due to the total export ban, all this is considered gone from world supply. So you can understand why we're getting phone calls to attend conferences and to attend meetings with governments, which has happened, and I'll talk about in a minute. You can sort of understand why that's happening. So when we announced we had this bismuth mineral resource estimate, we immediately were invited. And this is a conference that is being held by governments, including your government, the US government. Will be in attendance in India at the end of May, on the 27th of May. There'll be open meetings to discuss what needs to happen, which is obviously to diversify the supply of critical minerals in a global sense. This is a direct response to the supply disruption of the Chinese export bans, a direct response. So we will be going to meetings with the governments of Japan, India, South Korea, and representatives from your government, the USA, and we will be discussing downstream critical mineral production and also, obviously, these rare critical minerals, which are not big markets, but which are vital to defence systems, as we've seen in the previous slides. So that's going to be a very interesting conference. There will be open meetings, and then there will be private one-on-one meetings between companies such as ourselves or end user developers, and also governments, and also end user manufacturers. So that is going to be a very interesting time, depending on what we see developing for critical minerals. So we have this fantastic suite of products, gold and critical minerals. Cobalt I've put in here as well. Again, only 300 tons here, and it's worth about 30 odd thousand or 35,000 US a ton. But again, there's only really one supply here, and it's not a big market. So I'm confident we will have a buyer for that cobalt as well. And certainly traveling through India in the last year, there's going to be an enormous demand for copper and cobalt. Cobalt is, the metal they're trying to replace in batteries. They'd rather not use it, but because it basically provides thermal stability to batteries, it prevents those fires and explosions that are occurring in the electric vehicles and also in homes with small devices being charged, like scooters and bikes and those sorts of things. So cobalt is still very, very much in the mix as far as required in that sense. So I talked a little bit about how this is all going to happen. What we have here is very simple circuit, crushing, grinding. There'll be some gravity gold that comes out of the circuit, and we'll go to a bulk sulfide float. All of this will happen on site in Tennant Creek, and you can refer back to my map that I showed earlier. So all of this will happen in Tennant Creek, as will this magnetic separation through a limbs, which will create the magnetite product. The bulk sulfide float, which contains the gold, the cobalt metal, and the copper, and the bismuth concentrate, will all be put on a train and sent to Darwin, to the facility that I will show you shortly, giving us 5 revenue streams, 5 different products from one mine. It's remarkable, and it's why this is such a highly profitable project. So the site I talked about at our mine in Tennant Creek has been, at the Rover 1 site, has been designed, and we've got the numbers for you here. It's only 500,000 tonnes a year. So this is not a big operation. We have optimized this operation to make as much money as possible. So yes, there are other operations out there that, well, let's make as much gold as we can. The question we asked all the way through is, let's get every dollar from every tonne that we mine. And that's what's led us to this downstream production and this highly profitable mine. So you can see there that production I talked about. And again, this does not include any revenue for the bismuth. So you see that the annual productions and the life of mines and the totals that we have here. And again, this produces well in excess now of 3 billion in revenue from using today's numbers. This is the downstream part of the plant that I talked about on the lower left. So once the bulk concentrate containing all of the metals goes to Darwin, which is about 1,000 kilometres to the north, it'll be treated through pressure oxidation and SXEW. So we've got copper being produced here. That's 99% SXEW. That's 99.25% copper, LME grade, cobalt in sulfate. And as we talked about, which I'll show you at the end, the bismuth also comes out in the tails of this operation, and that will be available for sale at the port of Darwin. So very neat operation. This is called the Middle Arm Sustainable Development Precinct. And the reason we are building our critical minerals downstream plant here is because this particular area has been specifically designed to produce downstream critical minerals, and it is part of a federal government initiative, and we have been allocated land here. So I see a question there. There was a question there about some of the capital expenditure required. So I'm answering someone's question there. But there it is. So that's the breakdown of the costings. So the two process plants cost approximately 160 million Australian dollars, which is now about 100 million US. And the mine infrastructure are these other costs that needed to be added on: surface infrastructure, setting up the decline, contingencies obviously in there as well, and pre-mining costs, which is setting up, having all the human resources on site and setting up the equipment required on site, and the infrastructure and administration type stuff that you require in these setups. It's all included in these summary numbers here. The total capex is 280 million Australian dollars. As you can see, we'll basically do more revenue than that in the first year. There's also a question I saw about ASIC, our all-in sustainable cost. Again, these are very old numbers, but they are current at the moment because they are the only ones we've produced, and they came from the pre-feasibility study in 2022. Obviously, equivalents, if you like, 16,000 tonnes of copper equivalent and an all-in sustaining cost of 7,000 Australian dollars, with copper trading at around about $14,000 to $15,000 Australian now, or you've got it in gold if you like. All of the products added up and stated in terms of gold, it's about an 85,000 ounce per annum operation with an all-in sustaining cost of just over $1,300 Australian. Obviously, that's now trading at around about 5,100 from a revenue sense. So you can see why we're quite excited by the multiple and how those price increases have improved our operation. So we can also process third-party ores provided by third parties. That is, third parties that can use our pressure oxidation and our SXEW, which is basically electrowinning of downstream metals. So we've got solvent extraction, electrowinning of downstream metals. So within this white circle here, we can ship it to Darwin for $150, or within this blue corridor here, or this yellow circle, we can accept third-party concentrates at our facility up here in Darwin, which can either be shipped here and then shipped to customers all over the world once we've processed them. So we see that as a very important and flexible facility that we have. Just to sort of wind up what we're doing with exploration, I mentioned the new technology. This is what it looks like. Arrays of sensors are put out, and believe it or not, what these can detect, these are normally separated. Each of these sensors is separated normally by about 250 metres or 300 yards on the surface, and it can detect IOCGs up to about 600 metres beneath the surface and map out where these IOCGs are. So we'll be doing this for the next 2 years. Previous technology, which is gravity and magnetics, have picked up 100 targets. So the Rover 1 mine, which we've just been talking about for the last 5 minutes, was detected by the geophysics, which has detected these 100 targets throughout this entire Tennant Creek mineral field, which is about, as I said, around about over 100 targets that we'll be assessing over the next 2 years. There's been significant corporate play in the area. This is us here in the red square. A firm called Pan African, capped at $2 billion, has paid $150 million for a small gold play here. We believe there will be further consolidation in the area. We're not interested in that because we think we're on our own growth profile. But that is something we have to be wary of and have defence in place. So that's basically it. I'll summarise. We're developing the Rover 1 mine in gold and downstream critical minerals, copper, cobalt and bismuth. We also have that magnetite product, but 5 revenue streams. We're in advanced financing discussions for the entire project, obviously, and we'll continue those with governments at the end of May in India. The China export ban has created havoc in the bismuth market and other critical minerals markets, and we expect to see how that plays out. At the moment, it's sent bismuth on an absolute rocket ship to be 10 times what it was trading 8 weeks ago. Oh, sorry, in February. We're underway with a bankable feasibility study. There's been that takeover I mentioned, and we're using the latest seismic survey, which has been probably one of the greatest advances forward in seismic technology in the last 30, 40 years. We are at the forefront of that, developing it with the company that has that. Okay, I've left 5 minutes for questions, so we'll have a quick flick through those. Okay. Question here is, will you be able to access any government funding targeting critical minerals projects? And that's from Ben, and the answer to that one is yes, Ben. Australia itself has a division specifically set up called the North Australia Infrastructure Fund. That, to this point in time, has about $8 billion, which it will use to assist critical minerals projects get up. It's already helped a couple of projects in the Northern Territory, and considering that it's, as I said, it is the Northern Australia Infrastructure Fund, we are right in the middle of its wheelhouse. And so there's funding that we can source there. And our government has also started up a critical minerals purchasing fund, which it will use in the coming years to purchase and stockpile critical minerals. And obviously the rare ones like our bismuth could be considered for that. That's the only question I have. We are about out of time. I'll just go back to the original slide there. If you want to get in touch with Castile, we're at castile.com.au. Our ASX code is CST, and our OTCQB number is CLRSF. And we would love to see more of you guys on the register. But until we meet the next time, thank you very much.